Hey, ladies and gentlemen, welcome back to the channel. As always, it is Nick here, back for your daily crypto news and analysis. And we have a lot to go over when it comes to regulations, when we talk about, even just adoption of crypto assets and crypto technology. We know that it is inevitable to have these specific technologies plug and played within the traditional system. And, towards the end of this video, I want to go over a lot of things that you probably don't even know. You don't even realize is happening behind the scenes, which is a lot of, hidden discussions and even documents that are hinting at the fact that we are getting very, very close to utility being the big driver of value. Now, I do hope everybody's having a beautiful day or a beautiful night wherever you guys are out there in the world. Let's go back in time to just March recently, where we started to see BlackRock heating up the discussions around crypto and the narrative of, hey, guess what? This technology is huge and it is going to become a very big part of the traditional system. And here we have from Eleanor Tourette, new when asked about where Bitcoin on Wall Street will be in 10 years, BlackRock's head of digital assets, Robert Mitchnick, said, eventually we expect there will be a convergence of where the best of the old system and the new technology will become fused into a new infrastructure system in finance. And this was BlackRock essentially confirming where we are headed. And we even have over here, right? For our clients, Bitcoin is overwhelmingly the number one priority, and then a little bit of Ethereum and very little everything else. Now, this is going to change. This is where they really kind of, like when we talk about clients, right? Especially BlackRock clients, are they even focused on altcoins? No. A lot of people don't even know what some of these altcoins are. If I go out and talk about HBAR to somebody, they're going to be like, what the hell is that? They don't know. They don't know about XRP. They don't know about XLM, QNT. They only know about Bitcoin. They only know about Ethereum, because these are two of the largest crypto projects in the space that you hear every single time that crypto gets brought up. So, of course, that's what they know. But he says the crypto community would like to see a long tail of other crypto products from BlackRock, but he says that's just not where we're focused. They're focused on tokenization, though. We know that. But beyond this is why I said this. I said, remember what I keep saying. The steps are being taken in order to accommodate for these new technologies. Head of digital assets at BlackRock, and I already said it, this is the largest asset management company, but also remember that they are extremely bullish on tokenization as well. The journey into a completely new world of finance has already started. Focus on the projects in the space that are at the forefront of the tokenization and digitalization revolution. I already put a spotlight on XLMX, DCH, Bar, XRP, and others. There is a lot of great opportunities in this space. It might not seem like it right now, but this is an opportunity of a lifetime and probably the last opportunity of this size for the next 50 to 100 plus years. And I do believe so, right? I've talked to you guys about it. Listen, this is the number one reason why I even address these projects on this channel. Do you think that I'm excited about XRP just going sideways for a little bit of time? No, I'm not. I would love to see it pumping. But the problem is that, XRP, whether you like to admit it or not, has a crucial piece of the future solidified in it. And I've talked about this. XRP definitely does have a seat at the table, and it deserves to be there. You need to be a part of the free Discord right now. With over 2,900 plus members a part of this Discord and a ton of great insights dropped in here every single day. Discussions 24/7, 365 around crypto, free gems, free trading strategies. Guys, you need to join this free Discord now and get access to all of this, especially right now. It is the best time to be a part of it as the market is heating up. If you guys do want to join this, there's a free Discord link down in the description below, as well as in the comments below. What are you waiting for? Join today. But price action is what determines success in this market right now for retail. And the price action just isn't there yet. So a lot of people are just ignoring it at a time where you should actually be focused on it. But regardless, right? I even said after the Bitcoin ETFs got approved that I strongly believe that we are starting to move away from the speculative market into a much more mature one. Let's talk about it for a real quick second. Recently, we saw Jay Clayton discussing Bitcoin spot ETFs. His overall view was that during his prior tenure at the SEC, there was far too much wash trading and illicit use of Bitcoin to have an ETF. Now, apparently, Bitcoin is safe even after Elizabeth Warren and Jamie Dimon were saying the opposite. Confusing. The significance of the ETFs is not that the money will, come from it, but the reputation. We are now seeing, for the first time in history, crypto traditional financial giants coddling Bitcoin, and now they're coddling Ethereum. What do you think happens next? This definitely goes against the original idea of Bitcoin and crypto, but it was inevitable either way. Leaders from the space, especially from Ripple, predicted this is the year institutions really start taking crypto serious. Regulations and standardization is what I'm really focused on at the moment. Singapore, UAE, UK, Hong Kong, Japan, and Europe. Hell, even the US is now moving in on some substantial bills for crypto or progressing heavily. Look at the Fit 21 Act. These are big changes, guys. We are now starting to move away from the speculative and hyped up, asset class that crypto was to a much more mature one. I even said here that it would be a bad decision to avoid the key factors and rather be distracted by just what the ETFs do short term. Remember what the ETFs really are, a welcome mat for the Web2 retail herd. We witnessed Larry Fink and various other TradFi leaders practically spotlight tokenization as the biggest thing in the history of tech on mainstream media. I reported on the giants already tapped in on various fronts regarding this as well, like Hedera with Aberdeen or even Stellar with Franklin Templeton, and these are just two of many. We are starting to see the flood of institutional and enterprise players jumping into the space. Reports are coming out from names like Citi mentioning the keys to mass adoption. They are all aware of what is coming to the world of crypto over the course of the next few years. This will be bigger than the internet, and it truly will transcend every single innovation in history. Notice how I didn't even mention the convergence of blockchain and AI, which will accelerate this even further. At the end of the day, the ETFs are the beginning of what's to come for crypto. Institutions are embracing this market for what it really will become, a breeding ground of incredible innovation and wealth creation. The key for the retail sector was to be positioned before it really is too late to be early. I'm not focused on prices at this point, and I surely don't care what happens next week or next month. I am looking for further ahead. This is the biggest opportunity we will ever have for the next probably 10, 20, hell, who even knows how many years. Don't waste it. Now, I will say this, I am still focused on short-term price action in terms of my bags that I'm taking profits from significantly. And I will even take profits from like XRP as well, but I will always keep a significant portion of the bag for the long-term future. But outside of this, right? Even just more recently, I've talked about these two documents, an accelerated shift to instant payments across Europe, which was from May 18th from Ripple, where we also have this post was originally published in 2022 and has been updated as of May of 2024, because we're now starting to see big discussions happening around MiCA. And I even said that changes on the horizon globally for digital assets as a whole, especially central banks and organizations behind them, look to regulate and harness the next gen tech. These big players, these utility giants, they are going to shine, guys. Regulations are now in heavy discussions. MiCA goes live at the end of this year. This is going to be a big game changer. We're now starting to see major acts being passed and pushed in the US. I mean, it's only a matter of time until we start to see regulations happen for this entire space. I know that our original scope was at the end of 2025 with, the FSB, but remember, they could always streamline regulations. They could always bring regulations at pretty much any moment in this market. Now, I will say this, right? I even said that as we inch closer and closer to global crypto regulations, you must be focused on the companies in this space that are transparent and compliant. Now, as we look at these two documents down here from Ripple, like these are two major discussions on what Ripple is doing in terms of being compliant and also managing risk. We have at Ripple, we understand that compliance and risk management are critical to your bank, which is why we build solutions that offer greater visibility into and control over cross-border settlement, which this is interesting because they're talking about specifically banks. Ripple offers seamless integration with your bank's existing systems and processes, such as anti-money laundering controls, fraud detection, sanction screening, and even regulatory reporting. Guys, this is a company that was in the middle of a lawsuit with the SEC. They're extremely compliant, even with their clients. Ripple makes it efficient for your financial institution to meet compliance requirements while reaping the benefits of real-time settlement. While financial institutions integrating Ripple remain responsible for employing their own compliance measures, Ripple offers a way for your bank to reduce operational risk and management cost. Reducing operational costs through pre-transaction communication as well. And this is where we really kind of look at, transmit messaging and payments themselves and instant settlement. We even see down here like Ripple improves the efficiency of communications between sending and receiving banks. Pre-transaction communication on Ripple enables both banks to validate all required payment information, such as customer identity and risk profiles, fees, FX rates, and expected times of delivery before funds are transferred. This capability allows banks to know whether a payment will execute, thus eliminating the need to return failed payments. This is a big game changer. Now, also over here, we have managing liquidity and compliance with associated regulations. So banks face increasingly demanding liquidity and compliance requirements. These requirements hedge risk inherent to today's infrastructure in order to provide greater stability to financial systems. By providing modern infrastructure for cross-currency settlement, Ripple reduces systemic risk in 3 key ways. Number 1, banks transact directly with each other, eliminating counterparties and associated settlement risk. Banks leverage a competitive marketplace for liquidity instead of depending on one FX provider. And also, banks use Ripple to communicate with each other in real time, which allows them to identify and resolve risk to payments before executing them, as well as confirm delivery with absolute certainty. By removing the risk of correspondent banking, Ripple enables banks to lower their operational and risk management cost. And this is why when we look at Ripple, right, like they are fully positioned once regulations happen. And also remember, right, like XRP is also fully cleared. We know courts ruled that XRP by itself is not a security. Now, the key word there is by itself, right? Like as we look at that, you know, in and of itself, XRP is not a security. But when Ripple is engaging in institutional sales, that could very well be a securities transaction. And we know this. This is why, you know, there's still an ongoing lawsuit with Ripple and the SEC around those institutional sales. But once we're out of the woods with that, it's game over because Ripple and XRP are perfectly positioned to reap the rewards of being early in terms of, you know, being compliant and working with regulators. Now, also big shout out to subjective views for this. Did the Bretton Woods Committee just ask SEC Commissioner Hester Pierce how to force crypto regulations along? Note the mention of FSOC, which is chaired by the Secretary of Treasury, Janet Yellen. Guess who reports to Yellen? Nellie Liang, Undersecretary for Domestic Finance at the U.S. Treasury Department. And guys, remember the recent meeting with Ripple, Stellar, Chainlink, there was a few other players there, and the U.S. Department of the Treasury. This now makes a lot of sense. And this was back in April. And you have Nellie Liang sitting right there next to Lauren Beliv, the head of public policy and government at Ripple. This is a very significant image, especially considering the fact that a lot of the vision here in discussions was the integration of CBDCs, tokenization, and stablecoins into the broader U.S. financial ecosystem, including potential benefits for economic growth and resilience. And now we have this from the Bretton Woods Committee talking to Hester Pierce about how to force crypto regulations. Check this out.
How do you coordinate with the CFTC and the Fed and the U.S. Treasury on this? And is there something that needs to be done there to sort of force things to make progress?
Yeah, I mean, as you point out, we do have a much more complicated regulatory framework than a lot of other countries, and we have the federal state divide, which some other places don't have as well.
Right.
So I think
money transmission licenses.
Exactly. Yeah, a lot of the regulation has been done through those money transmission laws at the state level. And so I think that makes our world more complicated but that's true in the traditional financial world too, right? You have got to figure out, we in the CFTC have a history of not always agreeing on where the lines should be drawn and whether something should be in our jurisdiction or their jurisdiction. We've worked that out in the past. It's sometimes been a little bit rocky, but we have been able to work things out in the past. And so I think we have the tools in place that we could do that. I know I worked on some of the Dodd-Frank implementation around security-based swaps. The CFTC had been much faster at getting their swaps regime in place. And so we were trying to come in later and figure out how we could harmonize as much as possible with what they were doing. And there were a lot of conversations back and forth with the CFTC around that. And I think we can build on that relationship now. There's actually a CFTC SEC advisory committee that kind of is there for the using, and we should be using that, trying to bring in other people and talking to them. But I think you point out that it's not just the SEC and the CFTC, it's the broader set of financial regulators. We have the Financial Stability Oversight Council, which brings the heads of those regulatory agencies together and they can talk about these things. My fear is, though, with something like the FSOC, it's really a financial stability regulator. It's not really thinking about the day-to-day regulation for investor or consumer protection type things and market stability. And that's really where we need to start. And I think that's where other countries or other jurisdictions have a little bit of a leg up on us. They've managed to figure out how to come up with a comprehensive framework that doesn't dwell on these questions of security, non-security. But these questions are going to come up for those jurisdictions too, because frankly, a lot of these crypto things that are being built are not really financial. And so you're going to have to bring in either other non-financial regulators too. So I think there will be challenges everywhere, but we have more of them here.
Now, with this discussion, right, remember what's happening here. I love the fact that she did mention the FSOC, but there's also other organizations out there like the FSB that are instructed by the G20. The IMF and the BIS and even the World Bank are tied to that. These major organizations that do pull the strings are tied to the FSB. And remember that the FSB allowed Ripple to comment on global regulatory frameworks even back in December of 2023 or 2022, actually, in the middle of a lawsuit that XRP did get cleared from in the summer of 2023, but they were right in the middle of that lawsuit and they were allowing them to comment on global regulatory frameworks, which is why I've always said, like, this SEC lawsuit is nonsense. Like, there's a lot of, in my opinion, there's a lot of speculation on if the SEC lawsuit even matters, if it was just there to slow things down. And, you know, everyone's kind of questioning it. But in my opinion, the FSB, like, these organizations are far more important than, you know, what the SEC is telling us and what the SEC is doing, because they're directly tied back to a lot of these organizations that are pushing regulatory frameworks and, you know, really kind of moving on the beat with it. So in my opinion, yeah, I do think, you know, as we really look at what's happening here, things are starting to move along and they're starting to be streamlined. Even just more recently, we have over here breaking: the White House is eager to work with Congress on a comprehensive digital asset regulatory framework. And this is a big deal. This is May 22nd, 2024. Now, in my opinion, is this going to be, you know, something that does get pushed forward in terms of the FIT 21? Because that's exactly what this is. Like, is this going to be fully pushed through? Is it going to be stalled out? Is it going to be, you know, something that we have to wait on? We don't know specifically. I mean, as we really look at what's going on right now around crypto, a lot of the regulatory movement has been stalled. It's been, you know, kind of just waited out until something significantly happens. And this is something that could very well be waited out again. This is something that could be stalled. So we don't know. But in my opinion, this is how I look at what's going on. All around the world, we have, you know, these major crypto bills, major regulatory actions being taken, even in India, for example. Brazil now has their central bank planning year-end proposal for crypto regulations. And then also, even from the World Economic Forum on May 2nd, we have cryptocurrency regulations are changing across the globe. Here's what you need to know. And if we scroll down, we can see a lot of these major moves happening around, like stablecoins, marketing promotion, AML, KYC, decentralized activities. We even have down here like the US FIT for 21 bill. We also have the MiCA bill being brought up. Asia, in terms of their currency laws as well. A lot of these are pretty big moves. Down here, South Korea also, you know, being pushed into having their virtual asset users protection act, which was passed back in 2023. Actually, we also have some other ones down here in terms of like China, India as well, Brazil, UK. I mean, there's a lot of traction right now globally that is hinting at the fact that, yeah, regulatory movements around the world are happening right now. While the US, are they going to continue to stall? Or is it now time to really kind of push this through and say, all right, we need to step on the gas and we need to make sure that we are ahead of this? Because if they're not, they're going to fall significantly behind and they cannot afford to do so. So in my opinion, what's going to happen? MiCA is going to accelerate everything. I think that MiCA is something that we all need to be watching for, because the EU has so far always been first in line and then every other nation follows through. So I do think that this is one that is going to really, you know, put the pedal to the metal and make sure that everything is in overdrive around regulation. So this, in my opinion, is more important than pretty much anything else out there, even in terms of what the US is doing, because this is going to be the thing that pushes everything forward. But there's a lot of heavy discussions happening right now around what's next. And I do think that even these meetings with like Hester Pierce, with even the Bretton Woods committee mentioning specific organizations like the FSOC, which we do know is directly tied back to Ripple from that meeting. This is something that's definitely interesting to me. Let me know what you guys think, though, down in the comments below. I'd love to hear your thoughts. If you guys did enjoy the video, definitely leave a like, subscribe, turn notifications on because more free content. You guys are more welcome to follow me on Twitter and join the free Discord in the description below. And with that being said, guys, this has been Nick. Thanks for watching. Peace out.